Well, good morning, everybody, and welcome to our Future of Retail webinar in association with Google. My name is Jim Hawker. I'm one of the co-founders of Threepipe. We are a brand performance agency that works with some of the best-known multi-channel retailers and fast-growing DTC brands. We support them with deep expertise across paid search, social, creative, Amazon marketplace work, and digital shelf optimization. The last 12 months have been hugely challenging for the high street and physical retail, but on the flip side, many online retail businesses have flourished. But what will happen now as the economy opens up? Will the rush back to the shops prove the viability of the high street? Have consumer spending habits fundamentally changed forever? We'll be hoping to answer these questions and many more in the next sort of action-packed 90 minutes. To give you a quick run through of the agenda this morning, firstly, my fellow co-founder Farad Kudaruth will be presenting his thoughts on the macro retail trends that we expect to play out over the next 12 months. Then I'll be joined for a chat with the CEO of Hotter Shoes, talking about how the brand has been impacted by the pandemic and some of their current activities and plans. Then we have Liam Higgins, International Growth Manager at Google, who'll be highlighting what retailers can do to help expand into international markets. And then we'll have a panel event with our speakers to chat through some of the questions that you posed as part of the event registration. And joining that panel will be Ben Stevens, editor of Charged Retail, one of the best retail technology news sites, and Hannah Langley, head of client services at Threepipe. If you do have any questions that pop into your head during the session this morning, you can use the Q&A function on the Zoom bar, and the panelists will be around to answer some of those questions as we go along, and we'll keep some back for the Q&A with the panelists at the end of the session too. So we'll be recording the session and making that available to everyone after the event. So let's get cracking. First, I'm going to hand over to Farad, who's going to take us through the trends presentation that we expect to see happening over the next 12 months. Farad, I'll hand over to you.
Thank you very much, Jim. Good morning, everyone. The future of retail. So we're all going to do a little bit of future gazing, and what we've tried to pull together for you today is some things to show you an understanding of what's going on in the macro environment, some of the areas we need to think about, some of the challenges and changes that we're starting to see, which will continually evolve probably over the next year, couple of years, as we kind of phase out of the post-COVID world and back to some degree of new normality in terms of what that happens to look like. Okay, so the reality is that most retail businesses are going to continue to feel a significant disruption into 2021. And although what's quite interesting here is the rate of retail closures during the COVID period and pre-COVID period haven't really changed that much from the overall trend. But one of the things that isn't clear yet for us to see is actually how many retailers have stores that they just aren't going to open again going into the future, because that data hasn't been made available yet. But this continued trend of actually downsizing the amount of stores, whether that be permanent closures, results of CVAs, or choosing not to reopen, is one that's expected to continue. And you can see from the sort of job loss part in the retail sector, which predominantly has been store-based, that has accelerated a much greater rate, giving a lot of challenges in terms of where retailers can focus and what they can think about doing next. It's been quite interesting, I think, watching the sort of news over the last 3 or 4 weeks with the world opening up a little bit and certain areas and footfall returning in certain stores and certain brands doing a little bit better. What that doesn't seem to show, though, is that the underlying consumer confidence is still quite weak. And although that's starting to improve as the vaccine has been rolled out, we're nowhere near pre-pandemic levels in terms of what that looks like yet. And with macro trends around, the end of furlough in 3 or 4 months, anticipation of what might happen with further increases in unemployment, that level of uncertainty as the world opens up is likely to kind of restrict what that behavior looks like. I think the other point that's quite interesting and will feed into what happens with retail a little bit is actually going to be consumer behavior once other things are open that they can start doing again, right? So travel obviously being the big one, entertainment and live sporting events being the other, and the choices and selections that people are going to make. So I'll come back onto that topic a little bit later on. But marketeers and actually all businesses really need to think about sort of 4 key areas, I think, in terms of how they respond. And I think what's been quite interesting, if you look back to how we responded to COVID and the impact that it had for all of us, I think I'd be fair to say for most businesses, the first 2 or 3 months were categorized by sheer blind panic and what are we going to do, and trying to figure out what that needed to look like in the short term. But as that period has evolved, what we've seen for the businesses that some have been successful because COVID has actually helped in certain sectors and certain areas over certain periods of time to help increase the demand for the office furniture and garden equipment and skincare, and there are other sectors that have obviously struggled a lot more badly with food, restaurants, clothing, etc. But what we've seen really is this adaptation to volatility and having both a short-term vision about what you need to do here and now based on what's going on in your environment, which has obviously also included Brexit, the Suez Canal, stop getting stuck in different places, to then understand how you're going to try and map that piece out. And the second part really is around that understanding. We're seeing more and more brands and more businesses trying to do a lot more listening and understanding, because we simply do not have the tool sets, the data, the predictability of what went before. So we are all having to learn in smaller incremental bits from each other and learning what our businesses and our customers are telling each other to kind of make that work. The whole point about trying to make the complexity piece work much more easily is that we have got so many interdependent variables. It's actually trying to understand the pieces that are influenceable and the ones that we can actually make clear changes around in terms of what that happens to look like. But I think most importantly, and this is what we've seen a lot, and I'm sure Ian and Jim are going to chat about it quite a lot, but that ambiguity means that you need agility. So there needs to be a lot of short-term testing, prototyping of things, knowing that actually some products or services that you launch might have a more limited shelf life in terms of dealing with this particular situation rather than a longer-term piece, or some might actually bed into the future. But it really is a learning from technical and online methodologies about small test, experiment, learn, A/B test, roll out when you can, iterate, and then understand that demand is changing and how you can actually keep influencing that as a period of time goes along. One of the things that we've seen increasingly is that the level of data and the speed of data to understand what's going on in a market that's changing as rapidly as ours is obviously quite complicated, right? By the time somebody's done a survey and completed the survey data, you get it 2 months later, and actually what you're looking at is actually slightly out of date with the reality that you happen to be looking at this point in time. What we are seeing increasingly is people start using alternative sources of data to understand a proxy for demand or what's happening with their brand or competition intent or how they're competing vis-a-vis their competitors. And actually, if you scale enough volume, search data is often the kind of proxy for that, because it's very, very accurate and it's very, very up to date. So to give you an example here, it shows you, the trend between what happened with people searching for adult puzzles and children's puzzles, but you would have been able to see that trend line coming along from what happened from the first lockdown, potentially, to understand that coming into Christmas, if there was a second lockdown, that might be an area where you might need to make some changes around stock levels and availability of product and so on and so forth. But one of the other areas we're seeing this used a lot is comparative benchmarking of your brand vis-a-vis your competitors. How much has your visibility changed? Has it improved? Has it declined less? Where are you in that competitive set that you need to get an understanding of to then understand where you need to kind of move to next? It's probably no great surprise that retail's fortunes are probably tied to the COVID rollout. But I do think that the really interesting thing that we will need to understand is that phase of May, June, July, when things start opening up, there are still going to be restrictions in other phases of life, potentially travel, live sporting events. We know from other data that we're looking at that actually when it comes to the choices that consumers have when that world comes back to normal, they may make slightly different choices about how they spend their disposable income based on what they've been able to do. So understanding that at least short-term change in the framework of how consumers are going to behave from a retail perspective with the other elements that happen to be in there is going to be particularly important in terms of what that looks like. But you are going to have other knock-on effects, right? You're going to have other knock-on effects where even if there is international travel, a lot of people aren't going to do it or be able to do it. And domestic travel is going to be, or domestic holidaying is going to be a lot stronger. So actually, greater retail sales within those locations where we're traveling to throughout the summer from a domestic market may be an area where we can be more successful in terms of what we do. In terms of the legacy of lockdown and some of the impacts and things that we expect to be longer term or long term really, and some of the areas that we need to start thinking about, these are the sort of handful of thoughts that we've pulled together for you guys to start having to think about and how that might impact what your business is about to go through. I think the first is remote working. So I'm pretty sure nearly all of us on the call have had conversations, discussions within the businesses that we work in about what's possible, what's going to happen next, how is that new flexibility going to work in the environment that we happen to be working in. But as you can see, the potential numbers in terms of the potential jobs that can be actually done from home, either all of the time or significantly of the time, in the UK is actually close to 50% of what the overall market happens to look like. Now, how that really works and what we end up doing and how often we end up going back might look different to that from an overall point of view. But what is going to happen is going to be that there is going to be a significant increase in remote working. And the one thing that underlying the numbers that we really need to pay attention to is the reality is it is mostly better paid jobs. It is mostly white collar jobs. It is mostly jobs where the disposable income of those people moving away from shops, bars, and restaurants in the city will be at the higher end of that scale. So what you are likely to see is not just from a numerical point of view, but disproportionately from an economic point of view, that the amount of money that isn't disposed in those areas is going to be bigger than the numbers of people that no longer go to work on a daily basis. So that's one of the key things that's there, and it's a reversal of the pattern, right? And this will be interesting to see how it impacts on future recruitment and jobs and all the other bits and pieces. But it's always been highly educated workers flocking to the city centres where that higher paying piece is. And the reality of that is there is likely to still then be a significant increase or acceleration in the slice of retail that is done from an online point of view. We all know about online grocery shopping. The numbers sort of speak for themselves in terms of what happens to be there. But I think that the 2 or 3 underlying things that are important to remember are, yes, it may be up 115%, but the reality is, particularly during the first lockdown, none of the supermarkets could actually cope with the real demand that was being put through. There were queuing systems. You had to wait 3 or 4 weeks for an order. So not only did you have a number of people that couldn't transact online. So I'll give you a good example. I'm a Ocado customer. Obviously, the first lockdown, if you weren't already an Ocado customer, they were accepting no new customers. So Ocado physically couldn't actually do any more. And while I might have wanted to buy every week, I probably could only get a slot once every 3 weeks. So the underlying numbers really here are, it's really the growth that the sector could handle, not actually where the demand has been in terms of what that looks like. But the key thing for both grocery and what we've seen across other brands and other e-commerce is the percentage of old people. So obviously in grocery, they were 65s more than quadrupled their spend in terms of online grocery behavior. If I look at comparable sectors across comparable average brands, the highest volumes of growth in traffic has been from the over 65-year-olds, followed by the sort of segment of 45 to 55-year-olds. The growth has been in those older demographics. And for grocery, 6 in 10 say they're going to continue to buy at least some of their groceries online, but supermarkets will remain important for close to 40%. Not unexpected, but the number of deliveries we're all getting has increased. But the key thing I think is that Firstly, people expect that they're going to remain the same or actually slightly increase in future. The amount of customers that free delivery has become the mantra for, which it was before, to be honest, but it is already at 70%. You have got a massive increase in people searching for things that would never have been searched for pre-COVID, as cream tea kind of shows. And obviously lots of businesses launching new delivery propositions during COVID, particularly in the food sector. But I think what the sort of big macro number that's quite interesting to think about is we're talking about the equivalent increase in sales of nearly £1 billion a week from an online point of view, which is not insignificant. The other thing that's there and is important is the adoption of mobile wallets, which has increased fairly significantly. And obviously the changes that have been made to the thresholds of spend, which look like they're going to increase again, will probably increase the density and the numbers going through here. But already we've got 30% of consumers saying, you know, they leave their wallet or purse at home, and 55% of the younger demographic are in that space already. I think the ones that are interesting is the ideas around money being unsanitary, and actually that payment frequency of using their mobiles is expected to stay. That is probably also going to be tied together with more people using mobile wallets, storing mobile data, and actually mobile transaction rates using mobile devices also increasing as adoption of technology becomes more ubiquitous. There's no great surprise that online shopping is the channel where people are going to be spending or expect to be spending the most amount of money in comparison to last year. But I think there are two key things to think about, and we've all seen some of this behavior, which is it's local high street. For reasons of it being local, you can travel there, but also the whole piece around supporting local community much more, which a lot of people who've been doing that expect to actually keep doing from an overall point of view. But interestingly for all of us, I think also is the fact that 40% of people do not expect to spend more. And given that, you know, for most people, their spending has been curtailed compared to a normal year, that sense of risk about what's happening with the economy and their jobs and other bits and pieces actually means that they're going to be more cautious from an overall point of view. So in terms of people being excited to open the shops, visit the shops again, I don't think there's any great surprise in terms of Primark, TK Maxx, and IKEA, JD Sports of being in the core areas for some of the younger demographics, and the younger demographics 18 to 34-year-olds being the ones that are most interested in going out. But again, you know, and also probably related to risk and health and other thoughts. If we look at the two numbers for none of these for the older demographics, those are actually quite high. And that could also be reflective of the fact of behavior change. It could be reflective of the fact of localization. It could be reflective of the fact of more online behavior in terms of what they do. But the challenge when you look at some of these components around the people that are missing from the city centres or going to be missing from the city centres, the people that are less likely to or more likely to be shopping more locally and more online and less interested in retail or store-based consumer retail are actually the older, more affluent audiences, where if those are the people we're targeting, we really need to have a think about the mix of what our distribution portfolio starts looking like, because we're going to long-term likely be more disproportionately affected to brands like Primark, for example. Click and collect remains important. So 1 in 3 consumers say they've used it. The frequency is up by about a 1/3, and virtually everybody that says they're using it as a point expects to continue using it from an ongoing point of view. And so looking at more and more pickup points or destinations where pickup becomes part of your offering is going to be more important for a number of consumers. The big challenge that obviously online poses is returns, and in a lot of areas has always been historically quite high. But this is the one that's the margin killer in effect for everybody. So over the last 12 months, over half of Brits have returned items, which is slightly higher than the previous years. And obviously part of that is because people can't try stuff in store, and they're using it more as a try-on service. The reality that we've seen for a lot of retailers, and particularly in the fashion retail space, is if you're unable to control the level of returns and excessive returns, the impact on margin is absolutely horrendous. And so having better ways of understanding how to disincentivize excessive returns, more and more technology about being able to measure your feet to try a shoe on, or to understand what something might look like on you, or even really good sizing information, which is often missing, are all areas in terms of that product information and delivery that you guys should be looking at in terms of what you're offering consumers. One of the interesting things I think from the start of the pandemic is the sort of piece around come to me retail, where effectively a concierge style service delivers clothing, which again, particularly interesting to fashion retailers. There are a number of consumers, particularly the ones that actually tend to spend a bit more money, are happy to use those services and would like them as an option. Obviously, the big problem here is going to be scalability, in terms of what you can fit in and what actually makes sense for you to do. And then touching again on on a point that I've made a few times, which is nearly 3/4 of people are going to think more carefully about how they spend their money, and virtually everybody is going to be a bit more mindful about what they spend. And so I think there are really two big trends that obviously online's responsible for one of them, which is the ability to research things more easily, has meant that people have scoured the internet or actually looked at a wider range of possible things to buy from. That particularly applies to some of the older demographics. But it's also made a big difference in terms of the nature and types of products. So sustainability, ethically produced things, organic, etc., have all had higher proportional growth than other sectors, and that's a planned behavior that consumers are expected to maintain once we kind of come out of this cycle. In an attempt to recreate restaurant experience, we've all done a lot more cooking. I mean, that's really not a surprise, but I think the interesting thing is actually most of it's been home cooked meals. However, the home kit meal service piece has grown quite significantly, and it will be interesting for bars and restaurants to see how that hybrid approach in terms of eat in, part take out, part cook yourself, how that works going forwards, and where that can actually help them from an overall point of view. And I'm going to finish on one side. This really talks about the grocery sector, but it's actually applicable to all industries. Effectively, it's a piece of research done by BCG, and what they really look at is at which point for any sector does the tipping point of transactional sales for e-commerce become a point where you expect to see accelerated growth in the future. So, and for them, usually it's in this 5 to 6% range, which, if we look sort of 2019 for grocery, it was well under that. Obviously, it spiked to, an average of 10, close to 12 to 15% at certain times by 2020, and it's expected to dip down. However, the dip down is still well above what we expect that tipping point range to look like. So the expectation is actually that there is going to be a steep acceleration in online grocery adoption. And any other sector that's got a similar curve in terms of quite low transactions, but are now at that 5, 7, 6, 8% range, should have the same expectation, where the level of investment to now catch up and keep growth in line with what's likely to happen is something that they need to be looking at. That's it from me. I thank you, and I hope you found everything useful.
All right, thank you so much for that. And just a reminder, we're making that presentation available after this webinar session. We're on to the next sort of stage this morning, and I'm going to be joined by Ian Watson, CEO of Hotter Shoes. Hotter Shoes is one of the UK's most successful shoe brands, selling over 1 million pairs of shoes a year to over 4 million customers around the world. Ian joined in early 2019, just in time. and joined from another iconic shoewear brand, Startright, where he was previously CEO as well. Ian, welcome this morning, and thanks for joining.
Good morning.
It's been well. Perhaps we can start. If you just give us a sort of snapshot of the last sort of 12 months, let's say, of your life in the hot seat at Hottest.
Yeah, I'll give you the edited highlights. So I think if we go to the start of the pandemic, I think at the beginning of March, we're a manufacturer. So we employed over 500 people at our site here in Skelmersdale. So the first thing we had to do was close the factory. Now, for a lot of people in their supply chains, they had the problem where they had a large amount of inventory. Because we're manufacturing, we had the ability to close the factory for the whole of lockdown 1. So that's the first thing that we did, but clearly our distribution center continued to run. So we were already in the process of digitalizing our business. So what I think that 12 months did was make us accelerate our strategy first and foremost. And as our stores remain closed, we did have a strategy to come out of stores as their leases expired. But the pandemic forced us really into going down a CVA route. So we reduced our store portfolio significantly by 75%. We now have 17 stores in our portfolio and 6 concessions that are all within garden centres. So we made that change to our store portfolio. We dramatically reduced our product range. So we took approximately 45% of our SKUs out of the range. So we streamlined the offer. And at the same time, we launched our new website, which we use the latest technology, WebSphere 9, and we launched it in June. So we were planning to do that anyway, but the real acceleration of our digital prowess really came through necessity. And then we prioritized further digital projects. So we have a new app which is about to launch in early May, which Farid gave me a nice lead into, which will enable you to measure your feet in the comfort of your own home, 3D scan your feet. It will also use AR to put certain products on so you can try them on using virtual reality. And again, we've just continued to strengthen digitally. Our number of new customers that we're attracting continues to increase. And I think drawing from the first presentation, the one thing that we really saw was the adaptation of technology by an older demographic. So, predominantly our target customer is 55 plus, and in many instances older than that. And the common hypothesis was that these consumers will never shop online. And what we've seen is a great migration from people who shopped in physical retail, who are now shopping with us online. And that has been driven by they've used online technology in some instances for the first time. They're very familiar with FaceTime, Zoom. They're familiar perhaps with food shopping online. And our consumer was probably more concerned about the effects of COVID, certainly in lockdowns 1 and 2. And therefore, we've seen a huge shift in consumer experience. And yeah, so it was an interesting year to say the least. And touch wood, hopefully we're starting to see the seeds of recovery.
Great, thank you. Obviously, you talked about investment in e-commerce and augmented reality, the app, and I know from what I've read that you were planning to make those e-com investments pre-pandemic. Did you up that level of investment, or did you maintain that investment level that you were planning to anyway?
No, I think So we certainly upped the investment. Okay, so we had invested within our 3D foot scanning technology for stores pre-pandemic. We accelerated projects. So I think the strategy was in place all forced us to do was accelerate and invest a little bit more and be a little bit more laser sharp about the things we were doing in the business. And there's a lot of businesses that call themselves omni retailers. Now, actually, we used to call ourselves an omni retailer. Now I would say that we are a digital retailer that has multiple channels to reach the consumer, and each of those channels operates in a slightly different way. But the ultimate goal is to ensure that we get that customer data to enable us to be able to market to them directly. So I think it's a subtle change, it's a play on words, but it's quite a large strategic change for us.
One of the things we've spoken about in the past is that you guys seem to be trying, and it was mentioned in Farah's presentation as well, that you're doing lots of things, seeing what's working, rather than just, I think you called it the McKinsey model, where you're really focused on one thing. We're trying lots of things to see what works, much more agile to innovation, I guess.
Yeah, and I think I wrote down Farad's words there. You know, I think we're very keen to be fluid at pace. So the change in the model means that, so if you had a traditional retail business with 100 stores, which Hotter was up until 18 months, 2 years ago, right? What you would do is you would take inventory, you would fill those stores full of inventory and hope that the consumer comes in for a size 6 in one of the styles you fill the stores with. Now, a great model. However, you know, I see a day where we will be able to operate inventoryless stores, and the store actually is just a brand experience where you come in, your feet are 3D scanned. We use augmented reality to be able to try the shoe on for you, and the shoe is delivered to your house before 9 a.m. the next day. And if you start and think a little bit more outside the box, some of these things are relatively low capex and they're very low working capital. For me to be able to try a pop-up location with no inventory cost me virtually nothing. So again, I think we're just being a bit more flexible in our thought process, because the one thing again that came out of the first presentation was that we don't know exactly what's going to happen in the future. So I think strategy is going to become much more fluid, and businesses need to be able to adapt. So we're looking at trying things that cost us very low capex, don't take a great deal of working capital, and let's have a go. It's pretty much.
And actually, ironically, Hotter used to be a pure direct consumer business years ago. It was a catalog business, wasn't it?
Yeah, it was indeed. Yeah. So we founded in 1959 as a catalog business. The business didn't even open its first store until 2002 in Southport here in Lancashire. So again, having a direct business has always been the core of Hotter, and in many respects we're taking it back to that core, but in a digital manner.
Thanks. So obviously you've reduced the store count, but I guess your core customer is going to, someone who's walking into a Hotter store next week, what are they going to see that's different? I mean, is it going to be a completely different experience? How quickly is the information rolling out?
Yeah, so all of the foot scanners are all in store today. So what they will see is that the store staff will be actively encouraging them to scan their feet, and that's for multiple reasons. As people get older, as well, certainly I know, some of your bodily functions change a little bit. Your eyes, your ears, you go check them every year, okay? But actually your feet change as you get older, and therefore, you know, we're finding a number of people who are jumping on the 3D scanner, and we're telling them that they've got a particularly over pronation, or they've got a high arch, or they're actually a 6. The amount of people who say, actually, I've been buying 5s for the last 20 years and didn't realize. So we're encouraging people onto the technology we've got. We are trialing from the summer our augmented reality stations as well, in conjunction with that, in 2 trial stores. So I think as we get into the summer, you will see a significant change. We're obviously taking a significant amount of inventory out of those stores. What we have seen in consumer behavior is, historically, when somebody came in a shop and you didn't have that particular size, and the store staff would say, we can order that for you, it'll be in the store tomorrow, or we can deliver it to your home. We were only getting a 10% take up on that offer. Today, we're getting a 50% take up. because they're used to operating in this electronic world. So those are some of the changes you'll see if you pop into one of our stores over the coming days.
And then in terms of your future rollout, I guess, of that physical presence, you mentioned garden centres, or I think you did. Yep. They seem to be like the mecca at the moment for a lot of brands to open concessions, because they've remained open, right? And they're very popular.
Yeah, absolutely. The garden centres are currently on fire, and we have a concession model with Dobbies currently, and we're in 6 stores. So we're actively looking to see how we can expand our garden centre partnerships, because for us it's the exact correct demographic who is going in there, and high footfalls. So for us, and I think shared retail locations is probably going to be one of the key things moving forward. So it'd be interesting to see what happens with some of the Debenham space which is created, but shared areas where brands are not inhibited by significant business rates and rents to be able to cross-fertilize footfall is probably a pretty interesting route for the future.
One thing I forgot to ask, when obviously you've got an opportunity now to collect data on the back of the innovation that you're running in the store, which is the holy grail for retailers, right? That first-party data collection.
Yeah.
Was this always part of the strategy as a data collection point? And how do retailers think about doing this so they don't do what you do?
Well, we most definitely, so we have a database of over 4 million people. However, one of our key areas that we need to build on is the amount of emailable customers and consumers we have in the database, and therefore, I think a number of retailers are trying to capture data. Now, I think the way we're doing it is by offering the service. So by having your feet scanned, we're telling something useful about yourself that will be of interest to you. And I think that's the key to doing it. I gave you the example yesterday, Jim, of a retailer that will remain nameless, but I don't need a warranty on a bottle of screen wash. And clearly they're trying to capture your data, but in the way that you do it, they're just not adding value, and therefore that has a negative effect on people's ability to give you their data. So we're pushing that quite heavily and thinking of more innovative ways in which we can do it. And certainly our rollout out of our app, we're very excited about, because again, we've seen in our trials that the conversion rates within our app are approximately double what they are across our normal web traffic. So again, I think the ability to customize and interact with consumers is there to see. It was quite interesting to see in the slides earlier about which stores people were wanting to see reopen. I was gutted you didn't ask about me, but hey, we'll talk about that offline. I was looking at the bottom of some of the ones which the people weren't so keen to see reopen. And then I thought about it, Zara was a good example. They've got an amazing e-business. They've got an amazing app, which is our benchmark that we look at. And I think there's probably a correlation between the ones that have a very strong e-platform and app business versus the ones which don't or have a limited offer.
As part of the people signing up to this webinar, there were a lot of questions about landlords. And obviously you've been through that CVA process. One of the questions was, is this bringing landlords and retailers closer together? What do you think that relationship looks like moving forward now and then moving forward?
Yeah, I think my biggest learning going through a CVA process is that you can't group a number of individuals into one bucket called landlords. So we certainly, if we looked at our landlord base, we had everything from major corporations through to people who'd bought a shop as part of their retirement fund. Now, all of them see the situation through a slightly different lens. So pre-CVA, we talked to a lot of landlords and said, look, this is the rentable value. This is what you would get in a CVA process. Is there an option to negotiate? And unfortunately, when you're trying to do it by block, there will be people who see things through different perspectives. So we had some landlords who were very happy to take reduced rents and come to a proactive discussion, and others who said, you've signed an agreement for 5 years, that's it. And therefore we went through the CVA process, but the landlord base that we have now, we're working very, very closely with. You know, we've been in lockdown, obviously, since January, only reopened mid-April. We went back to those landlords and said, how are we going to do that? Because clearly we were closed, what agreement we can come to. And high proportion of them have said, yeah, that's fine, let's split it. And again, you know, in a very positive way, we're very keen to open the doors. We're very keen to pave them as well. And I think coming to a solution quickly not only helps the business move on, but enables the landlords to have continuity of cash flow.
One of the other questions that came in was how are you guys dealing with the overstock solution, overstock challenges when you were actually closed? Obviously, you're a seasonal business. You know, what are you doing with that product?
Yeah, it's interesting because, you know, life is all about luck and timing, in my opinion. And the lockdown came in March. So we had pretty much produced all of our spring, summer for that particular season. Okay, so, you know, we got basically 4 months to run of the season last year. Now, because we're a manufacturer, our supply chains mean that we take delivery much later because we convert products much quicker. So we were pretty clean spring, summer into autumn, winter, and we remain pretty clean now. Again, we import a lot of raw materials and uppers for our products from the Far East and India. So we're obviously looking at the Indian situation with concern, and for the people, and secondly for our business. So we did pretty well. And we chose not to significantly discount at the end of our autumn winter season either, because we managed our inventories pretty well. But I can imagine for businesses that have larger scale retail organizations and have slightly longer supply chains, that they are going to have a lot of products to clear when we get to mid-season and late summer sales.
Yeah. So let's talk about what's the future holding for Hotter now. We touched a bit on the product innovation and customer experience. You've just launched a new brand identity campaign, above the line work as well. Tell us a bit more about why you've done that and who is it aimed at.
Yeah, so when I joined the company, the first thing that I initiated was to bring the product portfolio and the brand back together. We'd seen a little bit of drift. You know, this business was set up as a comfort footwear brand, and over time, the brand had tried to position itself as slightly more stylish and less focused on comfort. And therefore, we've gone back to the core and said, okay, if we're going to be the best comfort shoe brand out there, we need to make the most comfortable shoes. So we've been investing in product technology first and foremost. We have a global license with BASF for the use of a material called Infinity, which we're rolling out across a number of products. And they give the ultimate in comfort. And at the same time, we've been working on our timeless styling. So we needed to go back to going back to your question on above the line. We needed to go back to the consumer base and say, hey, you need to have another look at who we are, because we're making tremendously comfortable products that offer the ultimate in comfort, but also in a stylish manner. And therefore, we're trying to also dispel the myth around being comfortable. So if I asked you, what does being comfortable mean? And we did this in research, people said, well, it kind of, you're dressed down at home, you are, you've almost given up a little bit. And actually, we're trying to challenge that thinking, because once you're actually comfortable within yourself, then you can actually do anything. So we're trying to make the brand appeal to be slightly more empowering. And yeah, we've got a couple of ads out there, and I apologize to everybody called Steve on the call. If you don't understand, you need to see the ad. But yeah, we're seeing some good results from it a week into its airing.
Just had actually a question I'll put to you from Richard about, do you produce for other brands? And if so, what experiences, volumes of cancellations did you have to deal with there?
Yeah, we don't actually, and there's a good reason why we don't. It's because shoe production is all about economies of scale. So, you know, for us to be able to make for other brands, we would need significant volume, and there are not so many comfort footwear players out there who could manufacture or need the volumes that we can make. So we haven't seen any downside to that.
We've got Liam on following this, talking about international expansion. What does that look like for you guys at the moment?
Yeah, so we have a strong business in the United States, and again, we've seen that be affected by COVID, probably slightly more than we have in the UK, actually. And it'd be great to hear Liam's thoughts on this. You know, Amazon is so strong in the US, and we have limited business with Amazon, but the US remains a huge opportunity for us. We, as with all other people, we're still struggling with our EU business, getting that back on track based on the rule changes and the ability to be able to do that profitably. But the US remains our #1 target for international expansion.
Well, we're going to wrap it up there. We've had quite a few questions come in, which we'll pitch to you at the end as well.
Great.
Ian. I'm now going to hand over to Liam. And as I said, he's the International Growth Manager at Google. He's going to share with us some tips about international expansion. Over to you, Liam.
Thanks very much, Jim. That was also really interesting. Hopefully I should have a couple of bits for you on the US as well, Ian. So yeah, I'll just kick into it. Jim, if you can confirm if my screen is presenting there.
I can see it, yeah.
Perfect. Well, good morning, everyone. So as Jim said, my name's Liam Higgins and I'm an international growth specialist here at Google. So in my 4 years at Google, I've worked with probably over 50 agencies, including some of the top digital agencies across the UK and Ireland, such as Threepipe, and over 1,000 businesses as a consultant as well. So prior to Google, I spent a year working in the marketing team at Johnson & Johnson. No involvement in their released vaccine, unfortunately. But aside from that, I was also highly involved in my family's local business here in Dublin throughout all of that. Now, today, I work with our top 1% of UK-based agencies, focusing on creating an ecosystem of partners who can work with businesses to help them to succeed internationally. So essentially the way that Google's partner offering works is that we work really closely with agencies so that they can help businesses such as yourselves to firstly surface new sales opportunities and potential revenue streams across different geographies, to help you simplify the international expansion process by removing operational hurdles, and then to unlock these opportunities by leveraging Google's marketing products and the data as well. And at Google, we're really, really excited about international because the brands that we work with are as well. They see cross-border trade as a key pillar to their future growth and a way to diversify their revenue. So where's the excitement coming from? Well, cross-border trade is becoming a more and more significant element to economic growth and particularly now recovery. And it now accounts for 1/3 of all of our trade. And that creates a massive opportunity for businesses. And particularly in retail, last year hitting more than $4.2 trillion in retail e-commerce, and likely to hit close enough to $5 trillion this year. Retail e-commerce is the new norm now. And what digital is doing is giving brands a chance to look beyond not just their domestic market, but look at international markets to try and win new business and new customers. So digital is no longer a trend. New businesses that are being created are now digital first, and the large traditional brands are also adopting it as rapidly as possible. To give you a good example, Nike set a goal in 2018 to reach in around 30% digital penetration by 2023. Now they hit that at the tail end of last year, and they've now increased that target to over 50%. And a lot of that's driven by their direct-to-consumer model. It's huge. And now retailers we know aren't the only ones who are benefiting either. The digital service industry is adapting and rapidly, particularly in the likes of exercise and e-learning. But that's helping to present other opportunities as well. I think we're probably all sick of the Peloton ads that we're seeing on TV constantly and online. But it's incredible to think what they've done. They've gone from a relatively unknown brand to one of the most prominent brands of the year by jumping on that digital exercise trend that came about as a result of COVID. So for me, international trade is a really, really exciting area to work in. And it's probably its default setting is to be a fast moving space to be involved in, just like we saw with Peloton. And the pandemic has disrupted global economies, it's disrupted businesses, and customer behavior is probably more importantly. And I'll try to focus on a couple of those today. So I suppose it's led to major trends that will shape the recovery phase that should lead to expansion opportunities for fast movers, such as the people who are tuning in today as well. So the World Trade Organization are forecasting a positive growth outlook for international in 2021. We've already seen the economy bounce back a little bit quicker than the recession in 2008, which is a massive positive. But the economic recovery will rely on international trade and globalization, even in spite of some of the geopolitical elements like the Brexit implications that we've come through and that Ian just mentioned as well. But as a result of that, as well as some other things, there's an increased focus on things like resilience or diversification, on improving supply chain. And it'll be really interesting to see how that develops over the next couple of years and as technology continues to improve. And I think that as a result of that, it's probably why we'll see cross-border purchases intensify. And as you can see here, we're expecting it to grow about 7% in 2021. So compounding that, purchase behavior we know has gone increasingly digital, with consumers spending more and more time online than ever before. And now this additional time spent online is resulting in increased exposure and exploration of both new products, but new brands as well. And we've actually seen that at Google, with international revenue typically growing at twice the rate of the domestic. And we know that digital transformation has been omnipresent in next to all verticals, with, I think someone mentioned it earlier, with 6 years of acceleration occurring over the past 12 months alone. But no more so has this been seen than in retail, with e-commerce experiencing probably the equivalent of 10 years of growth in the first 3 months of the pandemic last year. Because of that, or a big factor in that, is that the internet has very few borders. And with the increased digital reach, companies are now able to, or I suppose they're now capable of diversifying further from their domestic markets and reaching customers globally. But I suppose we also know that countries will and are recovering at really different rates. So as businesses, it's difficult to know where we should be looking, particularly with the impact of Brexit coming in and the EU being maybe not quite as attractive as it was before, but obviously still a really, really important market. But pre-pandemic, our growth was really driven by urbanization and by megacities. And long term, I think that'll continue. I don't think that investment will change in these cities despite working habits adjusting. And I think a huge portion of that will be down to continued population growth. So globally, that's about 20% more potential customers, but in the next couple of years. And I think that this is particularly exciting in the US because they have such a young working population. And along with that growth, it represents a really, really big opportunity for businesses. But I think in the short term, it's about who's bouncing back quicker. So it comes down to a couple of things. One, how quickly does the country control the pandemic? Two, how much pent-up consumer demand is there? And then thirdly, how much fiscal support is there as well? So the US are injecting their economy with stimulus, which is allowing people to save. And as a result, there's this pent-up consumer spend essentially waiting to happen. And on top of that, they've also got a really high rate of vaccinations. Despite how they maybe handled the pandemic initially, they're well on their way to recovery. So both in the short term and in the long term, the US continues to be a really big bet. And then on the other side, if we look at Asia Pacific, that has this incredible, fast growing and dynamic economy, a huge amount of their transformation in terms of digital has been because of things like more access to the consumer, which has come about through e-commerce platforms such as Shopee, for example, in Southeast Asia. Not only are they scaling up in Southeast Asia really quickly, they've also started scaling up quite rapidly in the last 2 years in both Brazil and Latin America, challenging Mercado Libre, who have been so dominant there for so long as well. And then another good example is Flipkart in India. So under the ownership really of Walmart, but they're another one who identified this massive population and emerging market in India, and what they're doing is now through their technology, allowing retailers to go online via mobile for the first time. It was such a difficult market to try and penetrate before, but as a result of these type of companies, it's causing consumer behavior to change. And I think that we should be really excited about that. And not only are people spending more time online, there are also more people spending time online. And I think we now have access to almost a new target market, digitally at least. I think as it's also been mentioned a couple of times today, but a lot of the older generation in the last 12 months who previously had no interest in purchasing online have become digitally savvy. And in general, they also have a higher spending power. So that opens up opportunity in both retail, but also in things like the digital service industry as well. So for me, I'm trying to think about why does more time spent online result in this? Well, when we shop, we're in one of two modes. We're either in exploration or evaluation. And what we're doing is we're constantly waiting for a purchase trigger to determine when we're going to buy. And today's consumer is exposed to an overwhelming amount of information and choice. We have search engines, review sites, social media, comparison sites, YouTube, and so I could go on. But each of these play a really big role in the decision-making process. So what happens with that? Well, for consumers and us as consumers, it makes us a lot more demanding in terms of what we expect from who we're buying from. We now have choices based on availability. We have it based on price. We have it based on delivery times. We have it based on sustainable sourcing of products and ethics. So we're constantly jumping back and forth between exploration and evaluation because we're constantly being hit with new information the longer we spend online. Multiple channels, multiple different formats of advertising, especially when you're being clever with it. As you mentioned, it is really important to make sure that you are appealing to your customer. And I think as a result of this increase and the more time spent online, there's more opportunity because as shoppers, we don't search by country. Like if I think about it, if I'm looking for a laptop, I don't search for laptops in Dublin or laptops near me. I search for the best laptops, and then I might base my decision on price comparison, or I might base it on availability or on how quickly it's going to be delivered to me. So as brands, we need to be able to create and offer a compelling proposition that matches your product or service in order to be able to cut through and trigger that purchase from some of the consumers. And I think if we are able to do that, and if you are able to succeed with that, what it's going to do is going to help you to win new customers, both domestically and internationally. It will help hopefully to improve the efficiency of that pesky marketing performance. Hopefully the guys at Threepipe can help you with that as well. And then it should also help you to increase your retention and ideally develop a much stronger customer lifetime value as well. So it's an area that I'm really excited about when it comes to international Google and what we're now doing to help businesses to improve that proposition internationally. What we're doing is we're going beyond that. So through Threepipe, we can actually help you to do that and think about this compelling value proposition for international markets by providing exclusive access to operations consultants rather than just focusing on media. So what they do is they will provide bespoke analysis and advice on how to improve that proposition on a market by market basis. So we'll look in at the different cultural nuances, the different areas that you can see listed here. What we want to do is to help ensure that you have the right payment methods on your website based on your market. Netherlands e-commerce is about 70% of bank transfer, very little cards whatsoever. So you need to be really careful about that when you're going and trying to win new business and then trying to maybe diagnose why you're not being successful there. We will be able to help you to make sure that your customer experience is faultless throughout, making sure you have the right customer service options for the market depending on what they do. For example, email, if you don't have a maybe fully localized website or localized customer service representatives, email is actually a much better form of customer service because it gives you a little bit more time to maybe translate what's coming in, to send something back that is a little bit more effective than trying to answer something in the wrong language. And then we can also help understand maybe help you to understand what the best delivery and returns offerings are, while also trying to help you understand maybe where you should set up from a supply chain perspective. If you want to set up a warehouse or a distribution center in a new market, where's the best place to do that and what's the cheapest way to go about it as well. We can now support with that. And probably the most important of the lot is localization. So we want to help you to make sure that you're localizing properly, not just translating. And we're aiming, I suppose what we're trying to do with that really is to help brands establish their own operations and their own presence internationally, rather than solely relying on other channels or other resellers to create that opportunity for you. And what this aims to do then essentially is erode that perception of distance between you and your customer with the proposition. So I think how I'd like to wrap that up with a couple of key takeaways is, and in terms of what you can do as brands, is firstly, make sure that you're present where your customers are. And that's online, particularly at the moment with the pandemic, with the increased media consumption. People are online. New habits are developing through COVID, and that means that there's new opportunities. Secondly, try to build trust through transparent operations and use that to formulate compelling value propositions to win international customers. And then thirdly, I'd really recommend to find a partner who can support you both in your marketing strategy, but also in developing the operational resource that allows you to successfully execute against that as well. So I hope that was helpful for you. Thank you very much for having me on as well. And I'd be more than happy to take any questions that you might have in the question section in a few minutes. Thank you.
Thank you so much, Liam. That was great. And so we're going to come on to the final session of the day, which is the panel session. And thank you to Ian. He's been answering some of the questions that have been coming through on the Q&A, which I was going to pitch, but now been answered. So for this session, we're also now joined by Ben from Charged Retail and Hannah, Head of Client Services at Threepipe. Ben, I'm going to come to you first.
Sure.
In your position as editor, you have a great holistic view of what's going on in retail. In your mind, who are the biggest winners and losers of the last 12 months?
Well, I mean, kind of as we've talked about today, clearly some of the biggest winners are grocery, things like Amazon, you know, anyone that was kind of a really strong presence online to start with. But I think grocery is a really interesting one because, you know, it succeeded not only because it was kind of the only thing left open, but, you know, the growth has far outpaced that. People aren't eating 10% more than they were. Well, perhaps some people during lockdown are. But before the pandemic, but, you know, grocery has continued to grow 10% month on month for a year, really. And this is really because they have been able to so quickly expand their online delivery capabilities. You know, they plowed so much resources and sort of thought into how to do this. So I think that is the kind of you know, the takeaway success story of this. And the more interesting thing is the kind of knock-on effect this has had on third-party businesses. So you know, if you think about the very start of the pandemic, when you could not get an online delivery for love nor money, but also companies like Deliveroo, Uber Eats were really struggling. You know, there was talk of Deliveroo going under in the first few months of the pandemic. But these pretty much every supermarket during the last 12 months has tied up with either a Deliveroo or an Uber Eats. So those companies have really found their feet, these kind of third-party delivery companies who have gone from being almost purely takeaway delivery, kind of experimenting with grocery deliveries and more retail applications, to that being one of their core key forms of delivery. So, I mean, Deliveroo is a really good kind of case study of that. It went from really struggling at the start of the year to expanding relentlessly across the UK. You know, I think it now delivers to something like 60% of the UK's population, and has launched its IPO, you know, a few weeks ago. Went from struggling to launching, although its IPO didn't do great. You know, that is a really amazing turnaround. So I think the kind of third-party companies that are connected to the big winners like grocery and online are the really interesting success stories so far. I guess kind of individual retailer wise, you know, before the pandemic, it was very cliche to say that, you know, omni-channel was future-proofing. Anyone investing in e-commerce and omni-channel was kind of setting themselves up for the future. And, you know, lots of people laughed that off as cliche, and, you know, it became a very overused term. But, you know, suddenly that became literally do or die. If you had kind of been dithering with investing in omni-channel strategies and weren't really prepared for that switch, suddenly, you know, so many startup retailers have just been brutally cold. So I think that the companies that have been able to make that switch very quickly, or have been agile enough to experiment with these new ideas and adopt that, are again the success stories. So I think one of the kind of take home lasting legacies of the pandemic will be retailers having more enthusiasm and being much more open to taking on these ideas, new ideas quickly. You know, they're no longer something that could happen in the future. They're now kind of essential. They're essential for survival.
It's interesting because obviously everyone held up the supermarkets as having a very good pandemic, but all their recent financial results have been pretty poor because the cost of, you know, covering up the supply chain, the cost of additional staffing have actually wiped out a lot of their profits. So it'd be interesting to see if that's future-proof their future success, and whether it's a short-term hit they've taken. Obviously, do you feel that in terms of the last sort of 12 months or so, that it's long enough time to change people's pattern of behaviour in terms of retail spend? Are we going to bounce back the way we did before, or is everything changed moving forward? Is it long enough to change that behaviour?
I think in a nutshell, yes, I think it's long enough. I think 12 months of shopping online has changed the way a lot of people will shop for good, to be honest. And, you know, we've talked a lot today already about this kind of entire new target market that has jumped online. And I think, you know, not necessarily just the older generations, but there's millions of people that just kind of preferred to shop in store, or were kind of didn't have access to the technology, and suddenly that's changed. And I think one of the main things with that point is that the industry has also changed immeasurably. I think perhaps before the pandemic, if you wanted to do your weekly basic shop online every week, it wouldn't have been difficult, but I think it would have been a lot harder. But now, because so many companies have invested so heavily in making sure that it's pretty cheap, it's probably about the same price as a fuel trip would cost to do a weekly shop now, and just so convenient. And primarily, I know you kind of just mentioned that lots of grocery stores are struggling with profits, but I read a study the other day that said for the first time in kind of 20 years, online grocery delivery is now as profitable for them as shopping in store, because there's that market share and they can make multiple deliveries. So I think because it is now so convenient and cheap, basically, there's really no reason people are going to suddenly switch and go back. I think the data kind of supports that. I think in the last few weeks where non-essential retail has been open, of course, there's been a spike in footfall, but we haven't seen, a online retail dropping off a cliff. So I think also, it's going to be a while before the high street, after this kind of novelty dies down, being able to go back to the high street. Obviously, everybody's quite keen to go back, but I think it's going to be a while before the high street can really offer anything that online doesn't anymore. I think because for 12 months, retailers have been focused so heavily on making sure they can offer as much as they can online, try and offer all the things that they can offer in store online, and that has been the focus for so long. Really, the high street has a lot of catching up to do. I think it will be a good few months before retailers kind of worked out what they can offer on the high street that really draws people that they can't get online. I think that shift is really going to take hold.
We talk a lot about the shift online and the positives that come with that. What are the potential negatives and fallouts of this?
Well, as you kind of mentioned in your slides earlier, a massive part of the pandemic is the shift away from cash. I think I read data the other day that said two-thirds of adults in the UK haven't used cash in a year. I think I'm probably one of them. And something like 80% of merchants kind of want to do away with cash altogether, because it's easier for them. They don't have to do the lock boxes. It's way more secure. It's much quicker. But that's kind of, lots of people don't appreciate that there's about 8 million people in the UK that still prefer to use cash, that are really struggling. These are kind of either low income people who might not have access to bank accounts, older people who aren't kind of comfortable with the digital payments, and they're really struggling without this access to cash. That also comes with the fact that free to use cash machines are disappearing. Something like 10,000 have disappeared off the high streets in the last 2 years. There's about 10,000 left. So that's kind of forcing things like click and collect cash schemes. Soon you're going to be able to order a cash pickup from local retailers. And kind of on that track, the rise of buy now, pay later schemes, they're another market that have really exploded during the pandemic. Obviously, they kind of target younger shoppers at the moment, but that comes with its own risks. Lots of younger shoppers aren't perhaps as financially kind of savvy. They're maybe not as experienced with taking loans, which these essentially are. So lots of a study came out from Citizens Advice, the charity, the other day, that said 25% of 18 to 34-year-olds who use these services are struggling to pay other bills because of that. So I think payments and things like that are really something we need to take better notice of and make sure there are things in place to stop anyone getting hurt. But also fraud is through the roof with this new entire audience and target market that are kind of completely new to online shopping. They are low-hanging fruit for fraudsters, unfortunately. So that also works on the other side of the coin with retailers who have had to launch online very quickly during the pandemic. They're also sadly targets for fraudsters and fraudulent businesses. So kind of on both sides of the coin, that's something that really needs to be addressed moving forward.
Okay, great. Hannah, I'm going to come to you and I'm going to give you a quote, which I thought was really interesting from Pippa Wilkes of John Lewis. And it'd be good to hear what Ian's got to say about this as well. But 10 years ago, the belief was that you needed a store to function online and get that brand awareness, but that's not the case anymore. People just shop online anyway. New brands launch online and that's all they have.
Yeah, I think we've talked about this a lot from everybody today, really. And I think the experience has to be worthwhile having a store these days. I mean, Farah talked about the fact that this year, and we all know consumers are more comfortable with shopping online and they're going to continue to shopping online. And then the stores that they really were excited to go into, like Primark, doesn't have an online store. And so actually they were excited to go back to somewhere they hadn't been, but nowhere enough on the others. And actually some of them, they were much happier to get in some of their niche stores and on the high street. I think the challenge that brands are having as well are the switch between high street to shopping malls. Now everybody wants to go back to the high street to support, their local communities, and brands just can't afford to do that in terms of rent and the up and down. Ian's talked about going through CVA, and we've talked to a lot of brands through CVA. It's so hard to control that huge investment these days, and I just don't think brands can afford to do it or need to do it because, again, and I think Liam spoke about this, and the fact that actually not only is there more people spending time online, but more of those people are spending more time. So everybody is moving online now. And with the rise of social media platforms and online platforms, we've seen TikTok rise, more and more people are using YouTube. Actually, that advertising and presence and discoverability is so much easier, and we are able to target them because there's more people there. So do you need to walk down a high street and see a store? Probably not. I think you need to look carefully at what you're selling, your target demographic, and actually, is that right for you as a business? But I don't think it's you have to have a store these days. I think there's multiple ways to actually find those consumers and reach out. And even if you do have a store, you need to be able to offer something different. I think, Ian said about actually the store, you wouldn't actually be able to buy anything, just scan your foot. So how do we use stores, even if you do want a store, is going to change, I think, moving forward.
Ian, you're nodding. Anything else to say?
You're on mute, Ian.
How many times have we said that in 12 months? Thank you. I couldn't agree more with Hannah, to be perfectly honest. I think the challenge is if you do have a store, then you've got to make it experiential. And for me, our stores are around brand amplification. And if they work and they work on a low working capital and low cash footing, then that's great. If there are areas where we're paying huge rents and huge business rates, then we don't need those either. So
those rents take away from marketing and the exciting things that you can do and new investments, because you've got such a high initial cost, especially for brands that have been around for a while. Actually, that should be spent on media, but it's harder to move the money out of one area to another. Well, that's what we're finding a lot with some of the brands we talk to. It's a slower process to get money out of rent to pay for some of the other stuff.
I think partly it was a way of defending the 9 Lewis store closures, potentially, which was announced a while ago. One of the big things that we're talking to a lot of retailers and a lot of our clients about at the moment, Hannah, is Google. Liam's on the call obviously today. The cookies are dropping off early next year, and a lot of our clients are sort of trying to figure out how on earth we sort of create measurement frameworks and target people. Give us a quick sort of summary of the situation for those that don't know much about it, and coming down?
Well, so iOS 14 is obviously going to stop all of the in-app tracking, and then I think it's the end of this year, the start of next year, Chrome's going to stop all your first-party cookies, which is going to mean that, you know, data is limited. I think there's a few things that retailers should be doing to prepare for these changes now. One of them is implementing the specific platform APIs, so a way to send data back to the platforms without using cookies. We've seen Facebook make a massive push for theirs this week and in the last few months. And also Pinterest have launched something similar. So really get that in place now so you can start collecting that data without the use of cookies, and keep checking for all of that tech development. I don't think nobody really knows what the impact is going to have. So keep checking for the latest updates and make sure that you get those in place as soon as possible. I think plan audience first, not platform first, because ultimately that's going to be where you get the best results, rather than thinking, oh, Facebook gives me or Google gives me the most data, so I need to plan that. If that's not where your audience is, then that's, you know, not where you should be spending your money. Look at how your website works and actually your login systems to make sure you can capture data when it hits your sites, because it needs to be logged in data rather than just sort of users. Ensure that you can segment customer lists. Email lists are going to become really important because they are your first party data. And also prepare early and start thinking less about last click, more holistic. You talked about measurement frameworks, look at sort of econometric modeling. Actually, how can we use the data we've got now to build a truer representation of what happens, rather than, sorry, just what's it, last click in your Google Analytics, which a lot of brands rely on because it's what they're used to, but actually moving forward, it's not going to give you the truest representation of what's happening.
That collection of first-party data is becoming much more important, and it's clearly the reason why Hotter Shoes have developed around it, isn't it, Ian? Was this in mind because of third-party tracking issues early next year?
Well, I'd like to say that we were at the forefront of thinking, but I think that is, yeah, no, it was, but yeah, it's part of it, yeah, obviously. Okay.
Actually, a question came in from Bruce, which I think was good for you, Ian, about how to minimize customer-facing failures with all this innovation going on. Not everything's going to work. How do you ensure you don't disappoint customers with promises that you may be making?
Yeah, so I think, you know, the starting point for us was to make sure we got the right team on board, right? So, you know, there's a lot of digital experts in the world, but we wanted to hire people who've got a strong track record of doing this before. And we're very fortunate in our location that we're very close. We're slap bang in between Liverpool and Manchester. So a lot of skill set on our doorstep. So, you know, we hired the right people. I think that's the important thing. And I think we touched on it earlier that, you know, you got to try all these things and just make sure. So we have a lot of beta tests currently running on multiple technologies that we're thinking about, introducing, and the digital partnerships in which we're working with now. Again, you know, the commercial terms for everyone are being rewritten. So we're doing a lot of things on, okay, we'll give you a 2% uplift in X, Y, and Z. Okay, fine. We'll sign a contract for 3 months. If you deliver it, then we'll continue. If you don't, then we'll walk away as friends. And there's a lot of deals like that we're working on to make sure that we minimize the risk and make sure we're getting the things that work.
Great. Liam, question for you. How can retailers better understand the importance of balancing bricks and mortar and online in the customer journey?
I think with that, the situation is, as I mentioned earlier, and a few of us have mentioned earlier, that the fact is that people are spending their time online, and this is how and probably where they're discovering new products and new brands. And with COVID-19, we've seen that new habits essentially are forming, and people are a lot more receptive to buying products from new companies and from new brands and trying new things because they're seeing so much of it coming through. But e-commerce still only accounts for 30% of retail spend. It's still fairly small in terms of the grand scheme of things. Now, I fully expect that to continue to grow and probably to pass the 50% mark and become a little bit bigger. But brands need to be present in both, because that's where the spend is actually happening. But the online piece, it's really about being present at the point of influence so that they can actually drive those triggers and influence the purchase decision that so that they resonate with their customer. So things like offline conversion tracking and maybe using digital receipts in store is what can help you to create that link between your bricks and mortar and online. And as I mentioned as well, moving away from things like last click, looking at it more holistically and seeing what impact multiple channels have on the final purchase decision is really, really important. So it's not just a case of being online and being digital and that's the recipe for success. Trying to do it effectively, maybe as part of an omni-channel strategy. If Ian doesn't laugh at me for saying that, for saying omni-channel now, but you should be able to drive those people who still prefer offline purchase to your store while targeting them online as well.
I've got a bit of a geeky question for you, because I guess a few weeks ago, my LinkedIn feed was just full of chatter about what Tesco's had done, and in terms of using Google local inventory ads, and it seemed to be like this massive thing that everyone got really excited about. Can you tell me why?
To be honest, I'm surprised at the fact that local inventory ads have been slower to pick up. They've probably been around for a little bit longer than that. I think it was obviously difficult to get. There was a difficulty in getting someone the size of Tesco who had so many stores on board. So I think that's really what created the chatter, is the fact that such a massive brand with probably such a complex way to do it are successfully doing it now. So, but I suppose where it's really important and where I think is really exciting about local inventory ads, touches back probably a little bit on what I said earlier as well, is it makes it so easy to show off your value proposition early doors to your customers. The only thing really that's probably more important to customers than price is availability. So local inventory ads allows you to do that, allows us to kind of still connect that offline with our online customer journey. So if you have good buyers, good supply chain, and also a good hold on things like seasonality, so you're not running out of stock, you're going to have a massive advantage, even if your price isn't maybe as good as some of your competitors. That availability piece is going to be so key to being able to win new customers and probably winning them over for the longer term. So shopping locals is really popular at the moment, but availability is also probably a little bit weaker. So that's probably an opportunity for brands with my international cap on. Those who have an international presence and strong supply chains, that's an opportunity for them to compete as well by using things like that.
I'm going to squeeze in one last question that's coming from Janet about the rise of the use of influencers as part of your marketing strategy. Hannah, I know this is something we do an awful lot of. I know, Ian, you're investing much more in influencer partnerships, I guess, to get people to reevaluate the brand. Is that right?
Yeah, I think we've been poor on social media historically, and certainly in our target age group, trying to find influencers in the 55 plus market has been tricky. We're now starting to uncover some of those things as well, but we see Instagram as being a huge opportunity for us, as certainly we're bringing in a younger demographic into the brand, the ability for them to search using social media and look at things on social media and then come through to the brand. And we're at the very start of this process, and I'm probably going to learn more from Hannah's answer, as are the audience, than I am going to give in content myself.
I actually think you're probably at the best stage of figuring out what's happened. I think, unfortunately, influencers have worked and everybody's jumped on them and are pumping more and more money into influencers and forgetting about their brand and who they stand for, and actually relying on somebody else to do that for them and losing their brand ethos by spending lots of money on influencers, because they have worked, and especially over lockdown when they couldn't do that, and it was easy to get influencers to talk about you and they could produce the content when you couldn't produce content. And I actually think we need to really understand and unpick that role of influencers for each brand and make sure the ones that we're using in an authentic way, not like, okay, let's send this person out with a discount code and get the results back. We're losing what the brands stand for, and ultimately that's what will last in a brand a lifetime, not, oh, they've picked a popular influencer of the moment and that's driven X, Y, and Z in revenue. So I think we need to for brands that are using them a lot, I think we need to be careful that we're not forgetting who we are as a brand.
If I could just jump in on that quickly, I did an interview with TikTok the other day and their kind of retail strategy. And obviously they're a fairly new medium, but one of the things they've said that they always say to people that they're trying to onboard onto TikTok is that on platforms like this, people are going to talk about your brands anyway. People are going to make content about your brands. And you know, rather than focusing on the specific influencers, it's more important just to get involved in the conversation. Just try and, rather than control what people are talking about, just get involved and try and put your own stuff out there. It's a very brave thing because people can run with it, and you know, you're putting your brand out there for these people to do whatever they want with. But you know, if you can do that and succeed, it seems to work a lot better for organic sort of coverage than sticking specifically with influencers.
Thank you, Ben. I think we'll probably end up doing a different webinar about influencers in the next few months. We need to call it a wrap there because we've hit our deadline. So I want to say thank you very much to our guest speakers today, Ian, Liam, Ben, Farad, and Hannah, and also thank you to everyone who took the time to dial in and attend the session this morning. We will be making the recording available, and also the decks will be available as well in the next day or so. Have a great day, everybody, and look forward to seeing you in the next one or meeting at some point in the future. Thank you very much.